Hi, this is Lara at Elliott Wave Stock Market with your end of the day analysis after the trading session Wednesday 28th of September has closed. Today my classic technical analysis suggests that we should see more upward movement tomorrow, but the preferred Elliott wave count requires downward movement. And so I'm going to use confirmation and validation points from the Elliott wave counts to indicate what's going to happen next. If we see a new high tomorrow above 2179.58, expect upward movement to continue to a target at 2188. To the downside, if price makes a new low tomorrow below 2151.79, expect downward movement to continue to a target at 2134, which coincidentally is the previous all-time high. At the weekly chart level, my wave count sees a cycle degree fourth wave here and a cycle degree fifth wave underway. Cycle 5 can only be a 5-wave structure, either an ending diagonal or an impulse, and this wave count has the best look for cycle 5. It sees it unfolding as an impulse. We have a second wave expanded flat and a fourth wave combination nicely in proportion to each other. So far this upward movement looks like an incomplete 1, 2, 3, 4, 5. There's a limit here to primary wave 5 because primary 3 is shorter than 1. Primary 5 is limited to no longer than equality in length with primary 3, so that the core Elliott wave rule stating a third wave may not be the shortest is met. That limit is at 2302.47. Primary 3 has a 0.618 Fibonacci ratio to primary 1. If that pattern continues, primary 5 would reach 0.618, the length of primary 3, at 2233. If primary 4 continues any further, which is possible but very unlikely, if it does, it can't move into wave 1 price territory below 2111.05. Let's look at this at the daily chart level where primary 3, I have ended up here, and primary 4 is a combination, expanded flat 335. The double is joined by a 3 in the opposite direction, and here we have a 535 zigzag to complete a double combination. The only atypical thing about primary 4 is intermediate wave Y, the second structure in the double, ends substantially beyond the end of W. Most of it has a sideways look, but the end of Y does not. The S&P structures don't always look perfect though, and this does meet all Elliott wave rules. It just doesn't have a really typical look. A combination should have a sideways look because the purpose for a combination is to take up time and move price sideways. To achieve that purpose, the second structure in the double normally ends close to the same level as the first. If primary 4 is over here as a combination, atypical, but it still fits, then primary 5 is underway. Primary 5 may only subdivide as a 5-wave structure, so either an impulse or an ending diagonal. At the hourly chart level, I had 2 wave counts up until the last few days, looking at 2 possible structures for primary 5. The hourly wave count looking at an impulse was invalidated, leaving only the ending diagonal scenario. An ending diagonal requires all of its subwaves to subdivide as zigzags, and the second and fourth waves are usually deep. And so far we may have a 535 zigzag up here, the first zigzag for intermediate wave 1, and now would be expecting for the main Elliott wave count to see further downward movement to complete a zigzag for intermediate wave 2. I have 2 hourly charts for you today. The first one looks at the more likely scenario for the Elliott wave count. The intermediate 2 is not over and is going to have a big obvious three-wave look to it at the daily chart level, and so we'd label it A, B and C down, still to unfold. To move beyond the end of A, we have a target at the hourly chart level for it. The second idea looks at the possibility that intermediate 2 could have been over here, but here's the problem at the daily chart level. If that's the case, then it's too brief, it's a little bit too shallow, but most importantly, it doesn't look like a big obvious 3-wave structure at the daily chart level, and it should look like this is a big obvious 3-wave structure, but obviously in the opposite direction. That's what it should look like for the Elliott wave count to have a really typical look, and that's why this first hourly chart is preferred over the second. Let's look at how this fits at the hourly chart level, where intermediate wave 1 may have ended up here, If intermediate wave 2 is going to continue lower in the next couple of days as a big obvious three-wave structure, then intermediate wave 1 should have ended here. And the only problem with this is that we have a slightly truncated fifth wave, minute wave 5, to end the impulse for minor C, and slightly below, less than half a point below the end of minute 3. Now we could possibly have had a truncation here. A truncation will come after a movement that was too far too fast, and we did have a strong gap up here. So this could be defined as too far too fast, or at least too fast. If intermediate 2 begins here, then we have a 5 down, a 3 up, and would now be expecting a 5 down. The target for it to end is at 2134 for minor wave C to reach equality in length with minor wave A. That would take intermediate wave 2 to within the range, the normal depth, in relation to intermediate wave 1 between 0.66 to 0.81, the length of intermediate 1. That's the normal length for a second and fourth wave within a diagonal, and so this is a reasonable target with a reasonable probability. Within the zigzag of intermediate wave 2, minor wave B may not move beyond the start of A above 2179.58. Now alternatively, what if intermediate wave 1 ended here and it wasn't truncated? Now this is possible. It's possible that intermediate wave 2 is over here as a zigzag. It will fit as a zigzag, but the problem here, as I said at the daily chart level, is it doesn't have a big obvious three-wave look to it, and I really would have expected it to be a bigger, more obvious 3, and so that does substantially reduce the probability of the second idea, but we should consider all possibilities. What if the first hourly chart is invalidated tomorrow with a new high above 2179.58, and volume in a pattern at the daily chart level does suggest quite strongly that that might be about to happen? If that happens, then I will expect intermediate 2 was over here and doesn't look like a big clear 3. It's slightly more shallow than the normal range. It's a 0.63 depth of intermediate wave 1, but it's not too much more shallow. 0.66 to 0.81 is the normal range. 0.63 is only just a little outside of that range. If it's over here, then this would be where intermediate 3 has begun, and again, subwaves of ending diagonals must all be zigzags. That's why you see this third wave labelled A, B, C. It's a third wave within an ending diagonal. The most common type of ending diagonal by a reasonable margin is a contracting diagonal. For this wave count, we know how long intermediate 1 was, we know where intermediate 3 begins, so we know the maximum likely length for intermediate 3. It's most likely to end before it reaches equality in length with intermediate 1 at 2202.42, so that the diagonal is contracting. A contracting diagonal requires the third wave to be shorter than the first. At 2188, minor wave C would reach 1.618, the length of minor A. That would see intermediate 3 end before equality in length with 1. It would be shorter, and the diagonal would be contracting, the most common type. To the downside, within minor C, no second wave correction may move beyond the start of its first wave below 2151.79. I'm not going to go over the alternate in this video. I covered that in the video at the beginning of the week, and I'm not going to go over the weekly technical analysis. I covered that substantially in yesterday's video. Let's go straight into the technical analysis at the daily chart level today. Make that a bit bigger. Here's the problem. Here's why I am expecting it's fairly likely we may well be about to see another green daily candlestick for Thursday's session. We've got upward movement now, 2 days in a row, coming on increasing and further increasing volume. The rise in price is supported by volume. It's not suspicious, and so far when we see this pattern from the S&P, it's usually followed by more upward movement, and so that would be my expectation from this classic technical analysis. We've also got a rather long lower wick and a reasonably strong green body from this candlestick for Wednesday's session. That's also bullish, suggesting more upward movement. ADX is still declining. It's telling us the market is not trending. The positive and negative DX lines are whipsawing about each other. They may be about to change over again, but they haven't done so yet. ATR is overall flat to declining, and Bollinger Bands are still reasonably tightly contracted. All three of those indicators together are telling us that this market is not trending, it's consolidating. And so we have resistance about 2190 and final support about 2120. And so we should expect price to swing from resistance to support and back again, and only to end each swing when it finds resistance and stochastics reaches overbought, and then a downward swing when price finds support and stochastics reaches oversold. But stochastics isn't really working that well for that purpose at this time, and so I'd expect we may have the end of the upward swing here, and we should be expecting overall a downward swing. That's not what we're getting for the last couple of days. But again, the problem with a consolidating market is when price swings from resistance to support and back again, it just doesn't do it in a straight line. That's not how it works. It's usually quite choppy and overlapping with light and declining range. That's what we've got here. So I don't think it's reasonable at all to expect price to move in a straight line now. That's not what's going to happen. So that outcome essentially agrees with what the preferred Elliott wave count requires, some more downward movement. Now, while volume and this long lower wick of this green daily candlestick are suggesting we should get upward movement tomorrow, on balance volume may be disagreeing. I had a resistance line in purple here, and I have this support and resistance line on balance volume here. This one is not steeply sloped. It is repeatedly tested and it is long held. We've had a test of support here and a test of resistance here and here. Now on balance volume has come up again to touch this line. This line has strong technical significance. This line may assist to halt the rise in price here, and that would support the first hourly Elliott wave count, whereas volume and this daily candlestick's long lower wick support the second hourly Elliott wave count. That's all from me at the end of that session with your extra video update, and I hope that all of our members are having a fabulous week.